Alright everyone, welcome to another video. In this one, we are going to talk about spotting trend changes versus liquidity grabs. Let's begin. Alright, so as always, a quick little disclaimer. Remember, no method is 100% foolproof or fail-proof, no matter how many confluences you add. Also, the lower the time frame, the harder it will be to rely on these concepts, so always keep that in mind. And yes, these methods can be applied on any asset. Now let's begin. Okay, so for this part of the presentation, we are going to talk about spotting trend changes. Some of you might know this as a market structure shift or change of character, whatever. There's so many terms for it, I can't keep up with it anymore. Point is, I need you to pay very close attention because it can get a little confusing if you are not following along properly. So if you have to, replay this part of the video so you can fully understand what I'm telling you. Hopefully it won't be too bad, as I did take my time trying to lay out the concept as easy as possible. But it's still not the same if you don't follow along and if you're not paying attention. Alright, so let's move on. Okay, so spotting trend changes. Typically, you'll notice two key things. So here is one of them. 1. The structure fails to create another high or low, depending on the trend obviously. And then you'll observe some candle momentum and price reaction in the opposite direction, signaling a potential trend shift. For example, this could be a reaction off of fair value gaps or order blocks towards the opposite side. Both don't have to be present to signal the possible change. So for instance, in this example, you can see that we're clearly going bearish, right? But what do we see here? In this example, we fail to displace under this low, right? Market fails to come down and take out this low. So we will label this as a failed break of structure. And what happens sometimes is, after the first change of character, sometimes there's an order block here, or maybe even a fair value gap, or sometimes you'll have both. You know, it doesn't have to specifically be an order block or a fair value gap. Sometimes you'll have something there, right? Something of that nature. It could be a support or resistance area, whatever, I don't care. Point is, there can be something like that present. But in this example, we have an order block and a fair value gap. And what does price do? Price will retrace into it, but typically it does not displace under it or show signs of the order block being weak or anything like that, right? Sometimes price can come down and sort of break through it a little bit, but that would be only to sweep some stops, right? But from what you can see here, price just slightly retraced into the order block and tapped into the fair value gap, and then quickly started changing in trend, right? So if you guys want, you can actually open up a chart and look for some changes in trend. See if you can spot these things. See if you can find like an order block or a fair value gap or an imbalance, a volume imbalance, whatever the case may be, right? Okay. Now I got another one that I need to show you right now. Now, as for the second thing that you have to know, the structure not only fails to create another high or low, but you'll also notice it sweeps liquidity as well. And then you'll observe some candle momentum and price reaction in the opposite direction, signaling a potential trend shift. For example, this could be reaction off of fair value gaps or order blocks towards the opposite side. Again, both don't have to be present to signal the possible change. So yeah, this is like another set of criteria right here, right? You could either look for the first one that I just talked about, or you can look for this one, right? This is also possible. So here, only swept liquidity, but price didn't displace or close below the recent low. So some people might see this as a stop hunt, right? Price will sweep some liquidity and then go back up. And what do we have here? An order block. We have an order block, price comes down into the order block and then goes back up. And obviously you can see, you know, your changes of character or your breaks of structure, but those are best confirmed when adding these kinds of confluences. Now, as you can see, when price was going up, there was a little bit of imbalances here, right? Or a fair value gap. And what did price do? Tapped into it and then kept going, right? Pretty easy, pretty simple. So again, guys, you'll have either one movement like the one I showed just a second ago from the first example, and then sometimes you can have something like this where price will sweep some liquidity and then shift the trend towards the opposite direction. Nothing crazy, it's pretty simple. Again, open up the chart and see if you can find something similar to this, okay? All right, so this is kind of like a little extra example I ended up adding last minute, and I thought you guys might like it. So again, you can also wait for a change of character and at least 2 breaks of structures. Now, this is usually if you want to be super safe, right? You want to make sure you're on the safest side to know that you have officially changed in trend. Now, you don't have to specifically wait for 2 breaks of structures. Sometimes, and this is what I've seen, okay? Some people will either wait for only a change of character. Some people will only wait for a change of character and 1 break of structure. And some people will wait for a change of character and 2 breaks of structures. It all depends on what you're used to trading with. And if you've already back tested your trading strategy and you've noticed that it works best with whatever change of character and break of structure combination you have, then you can apply that to the market. But again, guys, if you haven't back tested any of the things that you've been learning, you're wasting your time. Okay, you have to back test. Don't start another strategy. Don't implement this into your strategy until you have back tested it. Okay, it's very important, guys. Otherwise, you're going to be like, oh, this doesn't work. It's BS. It's not good. Okay, don't waste your time. Do it right. Back test if you have to. Open up the charts and see if you can find something like this. And as you can see in this example, you have, in this case, a sweep of liquidity. And then you have your first change of character, then your break of structure, and then the second break of structure. And as you can see, the trend has already been shifting. And what some people do is they actually, on the first or second break of structure, some people will enter off of that. So almost like a breakout, right? So on this candle, some people would have entered here and maybe put their stop loss under here, right? It's up to you. But again, back testing, guys. And a little tip is you can find a trade on the demand or supply zone that caused the first breakup structure, but that's up to you. So in this case, this area right here, right, this first breakup structure, okay, I only consider this a change of character, and then this right here will be the breakup structure. So again, on the first breakup structure, you can see here that we have a demand zone or an order block, whatever you want to call it. And as you can see, price came down to it, and it looks like it might have actually swept some liquidity under it, but it's okay, it's still valid, did not displace under it. And as you can see, when price tapped into this order block right here, I'm going to try to highlight it for you. Actually, give me a second. Okay, so as you can see here, we have it right here, right? So what did price do? Sweep, and then we have this nice engulfing candle. You could have entered here and maybe targeted this breakup structure, or you could have gone for a fixed 2R, doesn't matter. Or if you had like a specific area of liquidity that you wanted to target, it could be type 1 or type 2 liquidity, it's up to you. But point is, that is one way that you can trade using this method. Okay, so let's move on. All right, so now we're going to talk about liquidity grabs in this portion. This is actually going to be very interesting, so please pay very, very close attention. All right, let's begin. All right, so spotting liquidity grabs. The best way to know for sure is by identifying the overall trend. Okay, so if the overall trend is telling you, hey, we're overall bullish, then it is more than likely known as a liquidity sweep, right? So this we could say, oh, it's probably a liquidity sweep and not an actual change in trend, right? So number one, if fair value gaps or order blocks aren't being disrespected, that's also a sign that the price is simply being swept. So as you can see here, we already have this fair value gap being respected on the first attempt. And then what happened here? Price comes down, sweeps some liquidity, taps into the fair value gap, and what did it do? Continue moving back up, right? It was respected. And let's just pretend that price slightly closed under the fair value gap. That's okay, because we also have this order block right here, right? This would be considered an order block if I were to draw it out for you. As long as there's no strong displacement, and guys, what I mean by displacement is there's a strong movement breaking through a certain area, right? You'll see like strong candles, maybe even leaving like some fair value gaps behind as it's breaking through. Okay, that's what I mean. So as long as there's no displacement there, you're good to go. And here we have a clear respect of this fair value gap, and obviously that sweep of liquidity here. And then what did it do? Continue moving up, right? That is one method that you can use. Pretty simple, right? Okay, let's go on to the next one. Okay, so for the second part is if the type 1 structure, and if you don't know what that means, you have to look at my intermediate to advanced market structure video. If the type 1 structure on the same or higher time frame indicates that the overall trend is bullish or bearish, you can be confident that the price is likely sweeping liquidity. So we already talked about that, right? Type 1 structure, overall bullish. Lastly, you can simply look for the trend changes I mentioned earlier. So remember guys, I was talking about looking for like breaks of structure or a change of character, or if you want, just look at the first part of the video where I was talking about changes in trend, right? If you see that you don't see any of those signs here, or like in this example we didn't see any of those signs, then it's probably just a liquidity sweep, okay, and nothing to worry about. Now I will again recommend that you backtest and even open up a chart and look if you can spot something like this or something similar to this, right? The best way to learn these methods, guys, or anything that I teach or anything that anyone teaches, is to just follow along, try and see if you can replicate it on your own. Okay, that is the best way to do it. Now let's move on to what I have next. Alright, so some Q&As. So here are just some questions that I'm pretty sure you guys are going to have, so I just want to go through them fairly quick. So the first one, if all the confluences are there, will the trend permanently change? Well, my answer to that is there's no way to know for certain whether a trend is bullish or bearish permanently or temporarily. The best we can do is make educated guesses based on what we observe and the way price reacts in key areas. So guys, even though I give you these examples and these methods, all this information, there is still, it's like I said, it's still not 100% fail proof. Sometimes you can have, again, all the confluences in the world, but it might not hold up, but that's okay. That doesn't mean you should be afraid to get into a trade because of that possibility. Okay, that's just the price we pay as traders, and that's all right. Okay, that's also kind of what gives it a thrill, if you think about it. Now, the next one is, what's the best method? Right, so if you're wondering what the best method to find what a liquidity sweep is or what a change in trend is, well, the only way to truly know is by backtesting, right? As different assets respond better to different methods, the best approach is to follow the overall market structure, specifically type 1. So if you guys really want an approach to this and want to know which one's the best one, just give me the best one. The best advice that I can give is just follow the overall market structure, okay? Follow the overall market structure. Lastly, what is the best time frame? I know a lot of you guys want to know what's the best time frame to apply these concepts. So anything higher than the time frame you're currently trading in works. I'll explain in a second. But I prefer applying this to the 4-hour and higher to get my bias for the day or week. Now, what I mean about the first part of this answer is a lot of you guys are probably watching this video because you're trading maybe on the 1 minute and you're finding difficulties figuring out what the liquidity sweep is or what the breakup structure is or whatever. And you're like, okay, something's not right. I'm missing something. My recommendation, just move up a higher time frame. And so again, if you're trading like on the 1 minute, go up to the 5 minute. If you're having problems on the 5 minute, go up to the 15 minute. If you're having problems with the 15 minute, guess what? Go up to like the 1 hour, right? Just go up a time frame. It's okay to go up time frames, guys. There's nothing wrong with trying something different. If you're not used to losing so much, or if you don't want to lose so much, maybe it's time for a switch. Who knows? Okay, but backtest, guys. Backtest. You already know, I have a link down below where you can go to Traders Casa. It's all free. You guys don't really have to pay for anything unless you want to get rid of the ads and, a few extra little perks. So if you do want to sign up for that, I have a 20% discount on the first purchase that you guys can use. Just follow the link down below and you can use the code in the description. So check it out. Okay. All right, so we finally made it to the end of this video. It wasn't that bad, right? Not too long, and maybe not too short. But hopefully you guys learned a lot from it. And as always, before I go, I want to leave you with a little godly wisdom here. So Romans 12:2. Do not be conformed to this age, but be transformed by the renewing of your mind, so that you may discern what is the good, pleasing, and perfect will of God. ladies and gents, renew yourself, okay? Renew yourself. Please don't waste this opportunity. God has given you the chance to change whatever needs to be changed in your life, maybe even in your trading career. So don't let this moment slip. Other than that, guys, that's all I have for you. Take care. God bless y'all. I'll be praying for y'all. And I will hopefully see you guys in the next one. Peace.